This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Bashardis. Thanks for joining us at xm.com. A continued surge in the number of new coronavirus cases being reported in hotspots around the world has taken the steam out of the risk rally this week, with not even robust data out of China and the United States able to cast the worries aside. A stronger-than-expected jump in June retail sales was overshadowed by another record increase in new infections in the United States on Thursday, with more than 77,000 new cases. Daily records were also broken in Tokyo and the Australian state of Victoria, fueling concerns about how the reimposition of restrictions and the ensuing damage to consumer confidence would impact a fragile economic recovery. Stocks in Asia and Europe were mixed on Friday, following losses on Wall Street yesterday, though E-mini futures were indicating a positive open for the S&P 500 and the Nasdaq. The earnings calendar will be somewhat quiet today, but after disappointing earnings guidance from Netflix, the next couple of weeks could prove quite testing for tech stocks, which stand to be the biggest losers should signs of a faltering recovery trigger a major correction. That threat will likely keep investors focused on stimulus and vaccine headlines for the weeks and months to come. Recent vaccine trials have shown promising results, and this explains why increasing news of regional lockdowns hasn't thrown the risk rally completely off course. A more immediate risk, however, are the looming decisions on fiscal stimulus by U.S. and European Union politicians. EU leaders will hold their first face-to-face meeting today to try and hammer out a deal on a rescue fund to help virus-stricken European economies. But even with Germany's full weight behind a generous package made up of mostly grants, there is still strong opposition from several northern European states. Hence, an agreement this weekend is far from guaranteed, and the euro is drifting sideways ahead of the decision. The clock is also ticking in Washington as Congress is set to begin debating a new round of fiscal measures next week. The consensus among traders is that lawmakers are more likely than not to approve another fiscal package, and the U.S. dollar has been steadily edging lower during July on expectations that the recovery is sustainable. This was today's Daily Market Comment. Thanks for joining us at xm.com.